In the world of trading, there are timeless principles that stand the test of time. In the next few episodes, we will delve into the trading wisdom of one of the greatest minds in the field, Jesse Livermore. Join us on this journey to discover how his trading principles can empower you in the world of finance. Livermore, a legendary speculator, once said, "Profits always take care of themselves, but losses never do." He understood the importance of protecting oneself against significant losses by taking the first small loss. Let's illustrate this concept. Imagine you buy a stock at $30, and the next day it has a quick run up to $32. You immediately become fearful that if you don't take the profit, the next day you may see it fade away. So out you go with a small profit when that is the very time you should entertain all the hope in the world. Why should you worry about losing 2 points profit which you did not have the previous day? If you can make 2 points profit in one day, you might make 2 or 3 the next, and perhaps 5 more the following week. As long as the stock is acting right, and the market is right, do not be in a hurry to take a profit. Let it ride along with it. It may grow into a very large profit. Have the courage of your convictions and stay with it. Now, on the other hand, suppose you buy a stock at $30, and the next day it goes to $28, showing a 2-point loss. You would not be fearful that the next day would possibly see a 3-point loss or more. No, you would regard it merely as a temporary reaction, feeling certain that the next day it would recover its loss. But that is the time that you should be worried. That 2-point loss could be followed by 2 points the next day, or possibly 5 or 10 within the next week or two. That is when you should be fearful, because if you do not get out, you might be forced to take a much greater loss later on. That is the time you should protect yourself by selling your stock before the loss assumes larger proportions. Jesse Livermore's trading principles are worth remembering. Never sell a stock because it seems high-priced. Never buy a stock because it has had a big decline from its previous high. Follow the upward trend and become a buyer as soon as a stock makes a new high on its movement, after having had a normal reaction. The same applies when taking the short side. Avoid buying on reactions or going short on rallies. It is foolhardy to make a second trade if your first trade shows you a loss. Never average losses. Let that thought be written indelibly upon your mind. Livermore believed that anyone who takes the time and trouble to study price movements can develop a guide to aid them in future operations or investments. However, no guide can be 100% right. If a stock does not act as anticipated, it is crucial to determine that the time is not yet ripe and close out the commitment. Perhaps a few days later, the guide indicates it's time to get back in, and probably this time, it is 100% correct. Subscribe to our channel so you won't miss any insight and strategy for successful trading.